Hey everyone, I hope you had a great weekend. If you're here in Arizona, you probably thoroughly enjoyed the weather because we actually had some really nice days in the 80s, and the evenings and the nights got quite cool in the 60s, which is very hard to imagine for May. So it was a nice weekend, and that's why I'm taking advantage of sitting outside one more day, because I think this might come to an end here soon, or at least it's going to be a little bit too hot to do so. So anyway, let's talk about the market. Are we seeing a shift? That's the question that I keep getting and keep hearing from other agents and clients and everything. And the answer is yes, we're seeing a shift, but how much of a shift are we seeing to really make a difference as a buyer or a seller? And the answer to that is not much, really. I mean, it's a difference of, maybe not noticing how hot it used to be versus how hot it is now, because the bottom line is it's still a crazy seller's market. But some things have leveled off. So the CMI is down to 453.1, and last week I think it was 459, somewhere around there. So it's slowly dropping. It's dropping like 27 points per month. And at this rate, if it continues to consistently drop 27 points per month, it'll take us 12 and a half months until we get to a balanced market. Last week, at the rate that we were dropping, I said it would take us about 12 months to get to a balanced market. So that number is going to change every week depending on that rating and how fast it's going down or up, or if it stays stable. So that changes the timeline of everything. What's interesting, as I've been saying the last few weeks, is our supply continues to go up. So, ever so slightly, but it's still going up, 1.2 points per month. So we're sitting at about 23.7 in terms of our supply, which means we're 76% below normal for the number of homes we should have on the market. Our demand is up above normal, and that's just kind of holding steady at 107.5, which is 7.5% above normal. Dropped for quite a while, and now it's been hanging out there. So demand isn't shifting, and supply just ever so slightly has come up, and that's what really makes a difference in the overall CMI reading and the pace of it going downward and what we start to see in our market in terms of competition. Cleo's standing right here. You can't see her little head, but I'm giving her lots of pets. That's why I keep moving my arm. The reason this is important is because it is slightly shifting the market, and that's what you may or may not be feeling. And it really depends on the price range that you're buying or selling in, and it depends on the location too. So you have to remember Phoenix Metro is a huge area, and different areas and zip codes and locations and home sizes and home types all sell differently. So to generalize on all of this is one thing, but for specific information on a house that you're interested in selling or an area you're interested in buying in is going to be really important, because a lot of this is just general. For those of you who are new to my channel, all of this information I get is from the Cromford report, and they analyze the MLS data on a daily basis to give us these indicators. And the CMI stands for the Cromford Market Index. It's a algorithm that they've created based off of historical factors and supply and demand, and it helps us understand what the supply of homes is versus the demand and where we should be in a normal market. So their reading is that 100 is a balanced market, anything above 100 is a seller's market, and anything below 100 is a buyer's market. So a reading of 453 is definitely well into a seller's market. But for reference, we were at 515 a couple months ago. So we really peaked in the spring, and since then have started dropping. But you know what? We're where we were at in January. So even though we've continued to drop and people are saying like, oh my gosh, the market's changing, we're just in the kind of seller's market that we were in January. And if anyone was looking for a house or selling a house at that time, you'll remember it was super competitive. So that's a good example for me to share. Like, yes, we are seeing a shift and a change, but on the ground level, when you're writing an offer or you're listing your house, are you really feeling that much difference? Not yet. Not yet. So our new listing numbers, a couple other things I want to talk about. Number of new listings is now higher than it was in 2020 at this time, and it's more comparable with our 2019 levels. So yay, that's good news. We want more listings. Even if you're a seller, that's still good news, because it's not going to be too many listings where you aren't in a seller's market, but it will help out buyers a little bit. Every city's CMI rating has dropped in the last month, except for one city, and that is Surprise. And Surprise only went up by 1%. So it really was very minimal. But every city has a CMI rating, just like the overall CMI that I talk about. Cromford breaks that down by city. And we look at the month over month change on if that CMI rating has gone down or up month over month. And this is one of the first months that everything has gone down except for one city. Appreciation rates. So if you bought your house in May of 2020, pat yourself on the back, because you have experienced 40% year over year appreciation. May of 2020 to May of now is what we're seeing, which is incredible. So if you did that, that's awesome. If you have a house that you're considering selling and you owned it last May, you may be really surprised what your home value is. I would definitely explore that if you're considering selling, because you might be surprised where that value is sitting, considering the amount of appreciation we've had in the last year. A couple other things I wanted to note. So a lot of people have talked about cash sales, and have, there's a lot of talk, even like in the news, about investors coming in with lots of cash and people being beat out by cash offers. And I think the perception is that there are so many cash buyers, more so than ever before, and it's really making it competitive. And while cash is still a substantial part of our market, it's not that much higher than it's ever been previously. So right now the breakdown is about 23% of sales are cash and 77% are financing. So that's relatively normal. We've kind of hung around that 20%, 15, 20, 25% for a long time. What's different though is that our luxury market, so anything over $1 million, the amount of cash purchases is up to 39%. So it's incredible to think that so many people can spend just straight cash on something over $1 million, but they can. So 39% of our sales in the luxury market are cash, which it does always tend to be a larger chunk in that higher price range, believe it or not, but 39% is larger than we've seen before. And then the last thing I just wanted to talk about was that typically we have a little bit of a season in Arizona where the number of contracts that we have every year really peaks in the March and April timeframe, and then number of contracts, meaning basically the number of sales, the number of homes that go under contract and sell, it starts to decline through the summer. Everything slows down a little bit in terms of that volume, and then it peaks again in like October, November, and then kind of tapers off for the rest of the year. So that's kind of our seasonal trend for Phoenix typically. Right now is when we start to see those number of contracts declining, and they're not. So are we going to have a season this year? I don't know. We might stay flat. We might go up. Last year was all wonky because of the pandemic. Did not follow seasonal trends whatsoever. So who knows what this year is to hold. But right now it looks like we're not tapering as we normally do. Our number of sales and contracts is holding steady. And in some price ranges, it's actually increasing. So that'll be something to watch. But bottom line, are we seeing a shift? Yes. Can you feel it on the ground level? Not really. So nothing to cheer about yet, but it's just another thing we need to keep watching because we know we're finally heading in a direction that's a little bit different than what we've been doing for the last year. So I'll keep you posted on all of that. Of course, if you have any questions, you can reach out anytime by call, text, or email. In the description below, I have a link where you can set up a call with me if you want to chat about buying or selling real estate. And otherwise, have a wonderful week, and I will be back soon with more updates.